David Giordano, Blackrock Global Head of Renewable Power, joins us. Blackrock closed a $4.8 billion global renewable power fund. It's now become the largest independent climate infrastructure fund globally. David, always good to catch up with you. Just to pick up on where we were just talking about. So the idea that you have an oil major that sold off production assets to somebody else, and then that somebody else was able to actually reduce emissions better. How do you as an investor put money? Do you want to put it with the big oil company that's going to create the technology that has the cash? How do you think about it?
For our strategy, we're really looking at discrete assets that are provide additionality in the overall target to get to net zero. So I think it's a really all of the above strategy, Alex, and it's great to be here. It's great to see you after this long year. So as we think about sort of the broad energy transition, infrastructure, investing, field of play, if you will, it's really thinking about an all of the above. Where do we see opportunities to invest in really future-proofing investors' real assets portfolios?
So where's your top opportunity right now? I think maybe in which kind of sector and also regionally, quite frankly.
Yeah, so again, we have a global fund, as you talked about. So we really try to think about where are the most attractive risk-adjusted returns in each of the major regions. We're focused on OECD investing in this global fund. And so, kind of moving across the globe. APAC right now is extremely interesting, right? By 2030, 50% of all the electricity generated in the world is going to be generated in that part of the globe. And so that's a really interesting opportunity. We see, countries like Japan, South Korea, Taiwan, really leaning into the energy transition and creating both policies and just a business environment that's going to be really attractive for institutional investors to get exposure to the asset class. In the United States.
Sorry, no. I was going to ask you about the U.S. So perfect. Go ahead.
Yeah, sure. So the United States will be the biggest demander of capital for the energy transition going forward. And there's going to be a lot of really interesting opportunities. I think one area that we're particularly focused on is at the distribution level. So commercial, industrial, even residential solar installations. And there's going to be a lot of infrastructure that comes with that, just upgrade smart grids, new metering strategies there. And so that's a really interesting sector to it. And then offshore wind. I mean, we've heard a lot about it recently. I think we have an administration right now that is really facilitating, I don't want to even say expedited, but just an efficient process for leasing the land and then investing in the infrastructure that's going to be needed to support, what will be an industry that's going to look very much like what we see in Europe offshore in the next 10 years.
Where do you think that the easy money in this has already been made? And where's the harder money?
I would argue after 20 plus years in the industry, I haven't seen a lot of easy money to be made in this industry. I think that there's a lot of folks that have been, I think really taking a long view, and I'd put us there, right? 10 years here at BlackRock with this franchise to now get to this point to have this large global fund is really exciting for us. Look, I think you want to, it's sort of the old adage, right? You want to go where the ball is going to be, not where the ball is now. And so you want to be thinking about the energy transition in terms of what it's going to look like, not a year from now, but 3 years, 5 years, 7 years, and 10 years, and where are the investment opportunities? And I think, in some cases, it's going to require some real vision because it's not going to be obvious. In other places, I think it is going to be really obvious. Windy sites are always windy, so there's going to be repowering opportunities.
Mm-hmm.
Retail power is the most expensive power. So at the distribution level, offsetting retail power is going to be really exciting. But, there's all sorts of other pieces that come with those investments that you got to pay attention to.
So you mentioned no easy money. You've been in it for a few decades. And I wonder, when you have governments now really getting behind it, including the U.S., I mean, I feel like fund after fund is being raised for these assets. So are you noticing asset price inflation?
Yeah, I'd say we've seen sort of a really natural trajectory as the industry has become more and more mainstreamed to the cost of equity capital coming down. So for true core investment opportunities where you have long dated contracts, I think you're going to see, sort of a traditional cost of core infrastructure equity. I think as you move up the risk curve in terms of stage of investment or technology, as we get into some of the newer technologies, new applications to battery storage, new software applications for behind the meter energy management software. I think there you're going to, investors should expect a higher return because you are taking on more risk there. But I don't think we see anything that would imply that assets are out of balance. I just think we're finding an equilibrium in terms of the right cost of capital, finding the right sort of risk-adjusted returns.
How do you look at investing in, and this brings us back full circle to BP, how do you look at investing in current companies that are trying to green their stuff? Where's the opportunity there?
Yeah, that is not so much our business, right? We're on the private side, so we're focused on, we're within the real assets group. So we're not making sort of investments at the top co level of publicly traded companies. That would happen in different parts of the firm. But I do think one of the things that's really important about the mainstreaming of sustainable investing and ESG is having something that is, that is auditable in terms of reporting, aligning with the UN Sustainable Development Goals, working with folks like GRES, so that we don't just have, that we have some way that it's tangible and audible in terms of impact.